Good day, all. Ira Epstein of Linn and Associates with your metals market update for Wednesday, the 6th of March, 2019. We're about 4:12 p.m. Central Standard Time. So the standout metal today was the gold, which rallied a little bit more. Silver lost ground, copper, platinum, palladium, they're all basically losing. Dollar just plain stable. In fact, most currencies were downright pretty stable. The stock market's backing off. The World Council, the OECD, is talking about a slowdown in world economies, but at the same time, there's an awful lot of talk, stimulus packages about to happen. We're already seeing it in China. Now we're waiting to see if we get one in the morning out of the European Central Bank. If you looked at Canada today, they had their share. Their economy has slowed down. Their bank is changing the policy from one of wanting to raise rates. They're going into, like Mr. Powell says here, the patient phase. So you got to be careful here as to what's going on. People want inflation. It's that simple, and they're not getting it. When we look at the weekly chart of closes, we've been in a correction mode in the market, and now you have fallen from that high about $50, $45, $50 from this high of $1329.20. Now you're at $1287.60. When you take a look at a daily bar chart, you can see how the market plunged, and then it lost this momentum. It just started going sideways over the past 3 days. You got a little bounce in the market. That's not enough to tell you that the market's ready to turn. The trend is lower highs, lower lows, bearish. The market is under the 18-day average of closes, which gives the bias down. I have already told you in the other videos that one of the potential supports could be the 100-week average and then the Bollinger Band. Now, if we look at the Bollinger Band, yesterday the market finished at 1284.70 under the 1286.10 Bollinger Band. Day before, under it. And the day before, the market finished just slightly over it. So you had 2 days in a row under the Bollinger Band, which gives the market, the way that I teach this, a 3% chance of staying under it today. In other words, I'm looking for a bit of a reversal in here at any point. I got a little bit of a reversal. The nice part is when the markets reopen, the Bollinger Band will probably drop a little bit, and these two numbers are going to get closer together. We'll see what the market does. The trend is down. The momentum of the market is what? Oversold in terms of where the slow stochastic. So I have the bias down, lower highs, lower lows, bias down because I'm under the 18-day average. I've hit profit objective area, one of them. I have another one that's forming here for the shorts, and I'm in an oversold condition. When I come to GLD, the popular ETF, it's very similar. I think the difference here is both numbers are already under 20 in the slow stochastic. They weren't yesterday, and they weren't the day before. So you are oversold, and you don't, did you have both, by the way, in the futures? I didn't pay attention. You do. So both of them are really acting the same. It's the first day of being this terribly oversold. To change oversold to locking in a trend, you got to get through 3 days of this. You got 2 more days if it's going to do it. In GDX, you're oversold, not yet trying to embed. Both numbers aren't under 20. You already hit the profit objective, bounced away from it 2 days. That's all that it's done. Now, in this market, if you take out 121.97, you end this leg of the downtrend, and it could set up a challenge back to the 18-day average of closes. Notice the difference of the chart pattern here. You don't have anything like that in the gold futures either. This one's got a different look to it. In the gold-silver ratio, I think I've been very clear. You rarely get a metal bull market that lasts with gold leading the way over silver. And you can see that's not the case. The higher this number goes, the more ounces of silver you'd put into your shopping cart, wheel it down to the perfect store that doesn't charge a commission, and you'd swap silver for gold, all that silver. And you'd have to give them 85.36 ounces of silver to get 1 ounce of gold based on what the ratio is today. In May silver, the market did crisscross back to the right-hand side of the lower Bollinger Band. Now, if we look at yesterday, the market finished under the Bollinger Band. That number was 1513.80. The day before, it was at 1510.50 under the lower Bollinger Band. And the day before, if you come right here, you weren't. So the market first tried to make a stand at the 100-day average, still doing it in that general zone. And as you can see, if it rallies, that's the resistance area. What else is happening? Well, if we take a look here, we have yesterday both numbers under 20. This is Tuesday, not the day before. Today both numbers are under 20. Tomorrow's a real important day because if you embed, it means you've changed over from not being oversold to locking in a trend until the red line would pop back over 20. It's a rough area to want to get short after this big of a break in the market. That's all. In the copper market, I still look for price in the 18-day average to try to make a run at each other. I'm wrong in that theory if we get up here over that high. Basis that, what you've got, in fact, I could have taken this arrow and put it right here. Lower highs and a lower low at this point. Momentum is lost to the upside. We're in what I call a corrective backswing to the downside. In the platinum, I think I've been saying to you here for a couple of days that when you got up to here and you had the embedded reading and lost it, you put into play when this happened, and let's get to a number where it loses it, right here. So that was Monday. You're putting into play price in the 18-day average, trying to make a run at each other, unless the very next day on Tuesday, the slow stochastic embeds again. And you get a feel for that pretty early in the evening. Didn't do it. Now I'm looking for those two to come together. And that's where you're at right now. So we're back to a neutral stance. Now, if you want to lose any shot at the uptrend out of this current swing, I think you take out a 2070. It doesn't turn the market bearish. It just will break the potential of keeping this higher low, higher high pattern alive. Market, we'll find out what it does, but we'll see there. In the palladium market, you also lost your embedded reading. So until you get over, I'm going to say in this case, the highest of the highs, I still look for price to make an attempt to get back to the 18-day average of closes. And in the dollar index, look at this vertical rise that you had, and now you're getting into a stall. Let's assume the market moves up again. It is not yet an overbought condition. So if it did so and it got through 96.95, it puts into play the upper Bollinger Band, and it would have a position then of higher lows, higher highs. Let's assume it doesn't do that and it backs off. Then it puts into play the 18-day average as a neutral type market. So you put it all together, flip the coin, you try to do your best. And one of the ways that I teach is with tools. Popular trading tools. A lot of traders want verification that momentum has locked in. And the way to do that is with an Arun indicator. It's one of several ways. And what it really does is I've created a series of videos where this is always looking at the time between recent highs, making higher highs along the way, or recent lows, making lower lows along the way. And I teach you how to read these two lines that it draws, and they'll flip-flop on you back and forth and the importance of what they are. It's a couple of videos. They're short. They're free for you to learn from. All you need to do is give us a call, go to our website. You can also click up here to get to the website and take a look at our other offers, and away you go. I'm Ira Epstein. Have a good day.